Okay, so hi and welcome everyone to this afternoon's webinar. My name's Lisa McFadden and I work with the New South Wales Department of Primary Industries, and I'll be your host for today. This webinar has been organised by the Rural Recovery Support Service as part of the New South Wales DPI. And I'd like to ask Mel to give us acknowledgement to country.
Thank you, Lisa. I would like to acknowledge the traditional custodians on the land of which we meet today. I am meeting with you from the Gomeroi land, and I pay my respects to elders past, present and future. I wish to extend that respect to all First Nations peoples and acknowledge their strength, resilience and accomplishments. Thank you.
Thank you. Thank you very much for that. So today's webinar is titled Risky Business Insurance and Farming. So after today's webinar, you'll have learnt identify what the risks are for your farm and your farming business, but also to identify the specific insurance needs that you need to protect all your assets and your farming earning potential. So we'll learn ways to reduce our insurance premium. So with that, I'd like to formally introduce Carmen and Hamish White, who will be our presenters today. So I will read out a bio for you, but I'll just have to put you guys on screen too. Perfect. So Carmen has worked as a university lecturer. She's also local government, both in economic and community development, as also corporate governance. Carmen and her husband and other family members have a mixed farm based at Toowoomba in the Northern Riverina. She has lived and understood the complexities and challenges of farming business. So Carmen will give us a great wrap today. Hamish is an agribusiness consultant who provides a range of services, including farm insurance with reviews and also risk reduction or risk sharing strategies to reduce premiums. So welcome Carmen and Hamish.
Thank you, Lisa.
Thanks, Lisa.
So would you like us to make a start, Lisa?
Absolutely. The floor is yours, or the Zoom is yours.
Fantastic. Great. So we'd like to just keep it as informal as we possibly can with a webinar type presentation today. So we've got the Slido and we'll talk you through that. And you're welcome at any time to pop a question in the chat, and Lisa's going to help by reading out some of those questions as they come through. So why are we here? What we want to do is working out what the risks are for our own individual businesses, identify really the assets or what we need to insurance we need to protect our assets and our earning potential. And of course, the real one that lots of us are here for, learning ways to reduce our insurance expense, because it is quite a large expense for lots of farm businesses, especially when we look at all of the different things that we're insured for, potentially life and health insurances, which we won't go into today, farm general insurances, crop and livestock expenses, machinery, household, and all of the other insurances that we might have does certainly add up. So we're going to start with Slido. So for those of you that haven't used it before, don't be overly daunted. It's not too difficult. You can do your COVID login style thing up to the screen, and it just brings up a little app, and we'll have a few questions as we go through, and we'll be able to see other people's responses and use that as part of the discussion in this webinar. So we might just start by asking everyone where you're from, and you can let us know where you're at today. So we're in West Wyalong today. I'm in Toowoomba, as Lisa mentioned. And Hamish, where are you from?
Yes, near Wagga Wagga, at a thriving metropolis called Mara.
Mara. How many people in Mara, Hamish?
There'd be 100.
100.
Maybe 50.
Yeah.
To allow people a bit more time, Carmen, to access, could we go back to the QR code just so if they're having trouble?
Yes, certainly. Sorry.
Yep, perfect. Area Park, Moree, Temora.
I might try getting it up too so we can see each other's answers.
West Australia, welcome.
Great, we've got a few from Moree, it looks like.
And we've got a few in the chat too. We've got Indigo, Narrabri, Glencoe, Pinkett, near Glen Innes. Sorry, I've never heard of that little place before. I'm assuming it's a little place, no offence. I think Sandra popped that one in.
Where was that, Lisa?
Pinkett, near Glen Innes is.
Oh, that's big enough.
Oh,
No,
it's big.
It's a proper town.
When you're
Is
from
it?
Talimba and Mara, Glen Innes.
Okay.
It's huge.
Yeah.
Woodburn, you can tell I'm from central New South Wales. Goondiwindi, welcome, interstate. Amber Springs.
Fantastic. So there's a really big spread of geographic regions. So that really leads nicely into this first slide. Every farm business is different. We're coming from a huge range across the state. We've got a few people interstate in Western Australia. Our soil types are different, our industries are different, our businesses are different, our business backgrounds are different, our attitudes to risk are different. So everybody is going to approach these decisions for their businesses in a different way. There's no one right way when it comes to this sort of thing. In other parts of more science-based areas of farming, there might be one right way of doing things, but in insurance, I really don't believe there is. It's just what suits your business, and approaching it really with a flexible attitude year to year, decade to decade, certainly I think is probably the best way to go about it. Now, here's our little disclaimer. And the one thing I'd just like to add to this every time is you're participating in a free webinar, which is great, thanks to the DPI. Don't make decisions for your multi-million-dollar or aspiring to be multi-million-dollar farming business based on a free webinar. Get some professional advice. There's some great people out there. What we want you to leave with today is a list of the questions to ask and a better understanding of some of the issues around it, so you can make more informed decisions when you get answers to those questions. So another little Slido question now. What can go wrong or right in farming? What are the variables we're dealing with? Hamish, you've given up your corporate job to enjoy
a bit more farming.
Yeah. What's been going right or wrong lately on your place?
What went wrong? That's easy. Someone left a gate open, so all my twinned and single use are all mixed together again.
Yep,
it's been great. But what went right? Well, it's rained at the right time.
Yeah, okay.
And yeah, we're in great shape.
Yeah.
Going into winter,
so we're just a little bit north of you, and it's rained at the wrong time, Hamish, where we are.
Yeah.
So what sort of answers have we got coming up on the screen there, Lisa?
We've got bushfire, drought, weather, disease, everything and anything, accidents. I think it does show the diversity and what it's affecting everyone.
Yeah, certainly the weather, I think, is the overwhelming one. And it can go right and it can go wrong, certainly. So there's lots of variables there, some of which we can have some degree of control over, some that we can only influence, and some things that are neither under our control or under our influence. Parents. Oh, that's a good one. It certainly can go wrong or go right. That's a really good one. So what is risk?
Risk. What's risk? Risk can be, there's all sorts of different risks, of course, we face in farming, Carmen, some of which are insurable, e.g. Fire.
Not parents.
Not parents. Accidental damage. But there are a lot of things, a lot of risk in farming that's not insurable. The example, drought. So the risk we're talking about today is mainly insurable risks.
Yeah. So risk is theoretically made up of two things. Basically risk is something not turning out as we want it to turn out, or as we think it will turn out. So risk is made up of two things: likelihood, so that's a probability that something will occur, and the consequence. So what's the result or impact if it does occur? So you can think of something really, really simple, like getting a flat tire on your car. What's the likelihood of it going wrong? Something happening, fairly highly likely. What's the consequence? Well, that can be variable depending on whether you're heading to your own wedding, whether you're running into town for a webinar, whether you're just dropping kids at the bus stop, and it's a, you know, a journey that you could make on foot if the car stopped. When we're looking at business sorts of things within our farming business, we can look at the likelihood of something occurring and the consequence of it occurring to actually assess the risk that faces, the risk faced by our business. So, Hamish, if we look at something like 10 rams being stolen, where would you face that? Where would you place that on this risk table?
Well, it's that would be rare.
Yeah.
I would have thought.
Yeah.
And if you're a commercial sheep producer,
yeah,
and your rams are worth $2,000 each,
yeah,
then in terms of that's certainly minor. That $20,000 out of the cash flow lost would certainly hurt my cash flow. It wouldn't hurt every cash flow, but it would hurt mine. So I would place that as sort of, I would have some importance place some importance on that, whereas someone who has 5 times the amount of sheep as me may not.
May not. And certainly a stud stock producer just before their sale or just before their joining period could have major consequences or catastrophic consequences.
Yes, that's right. Yes, well, yeah, that's right.
So what about something like a smashed windscreen? That's something that often you see people paying an extra $150 for in their premium. Yes,
that's highly likely that you'll get a smashed windscreen if you live on a dirt road.
Yeah, so you're probably almost certain, you'd say, or likely.
That's right, that's likely.
Likely.
It is a cost you can, it's probably a negligible cost to have it repaired, but it has become very popular and hence, people like getting something from their insurance, don't they? So they do usually sign up for a windscreen. And
I think often when we're looking at risk, we often look a lot at the likelihood of something happening. So that that windscreen breaking, that mobile phone, all of those things that happen very likely, we think are high risk. But often the impact on our business, and we might take an O off the top column or add an O on, depending on the size of the business, the impact of that on our business, on our farming future, on our quality of life might be quite negligible.
Correct.
These other risks up the end here, which is sort of perhaps less likely to happen, but might have major or catastrophic impacts on our business, often gets lost. So how about something like significant damage to 2 sheds on your farm and a total wipeout of 1 shed? Where would you sit that in this risk table?
Well, that's major.
Major?
I would have thought.
Yeah.
Again, in my situation, it would be a major loss and one which I would like to be insured against.
Yeah. Where would you sit the likelihood though?
It's still unlikely.
Yeah.
So
still unlikely.
It's unlikely.
Yeah. So insurers also have a really good understanding of the likelihood of events. And this goes into your premium calculation, doesn't it?
Correct. So insurers, it would almost seem now it's as much to insure a car is as much to insure a house, because the likelihood of your house burning down is extremely low.
Yeah. Whereas
the likelihood of you ruining your car is possible.
Pretty high.
Yes.
Pretty high.
Certainly much higher than the house burning down.
We can't tell too many personal stories here.
No.
So not only does our fear of things going wrong impact on our assessment of likelihood, but also our own past experience and anxiety impacts on this as well. So we've got another little Slido question there. How do you feel about that? Does our past experience and anxiety impact on our likelihood of things going wrong in the past? So if you've had that catastrophic event happen on farm where you've lost a couple of sheds, or that's happened in your farm family history, you're more likely to think it can happen again. What have we got? Overwhelmingly, yes. 100% of people are saying our past experiences can impact on our assessment of likelihood. Now, it's really important when making decisions about insurance that we try our best to remove the emotion from that assessment of likelihood. Yes, perhaps insuring something that's happened before where we weren't insured before gives us a sense of comfort, and that's important. If something happened once and it's more likely to happen again, because of the nature of the event, yes, it's important to be insured for it, but it's also important not to think that a one-off event is necessarily going to occur into the future as well. So what does insurance do? Does it reduce likelihood or consequence? Are you superstitious, Hamish?
Yes.
Yes.
Yes, I'm very much into fate, to put it that way.
Yeah, right. So do you think having an insurance policy for something actually guarantees it won't go wrong?
Correct. I think it can really help.
Yeah.
Yeah.
But is that true, Hamish?
It's not true
No,
at all.
it's not true at all.
It's not true, but that's how I feel.
What is the we're feeling a little bit like breakfast presenters here. What does the audience say? We'll take that question to the audience now. What does insurance do? Reduce the likelihood or reduce the consequence? Yeah. And everyone there is making a sensible decision, but insurance actually reduces the consequence of something happening. It doesn't stop us having a car accident. It just means that we can more easily address the financial implications of the car accident than we could before. One thing in farming that's really important to understand is cascading risk. Will something else go wrong? Now, because of the number of variables we're dealing with in our farming businesses, and because of the interconnected nature of business, of cash flow, of machinery, of integrated weather events, if one thing goes wrong, it's more than likely something else will go wrong. I didn't put the slides up here because they are a bit triggering, but in the university lecture I do on risk, I've got a lovely example of a farmer from South Australia who had a small fire start on the back of a ute at sowing time, and they lost their entire sowing plant in one very rapid fire. So they lost their tractor, their air seeder, the sowing bar, the seeding bar, the fuel truck. They lost their grouper. They lost the ute with the tools on a second ute. Everything all went in the matter of about 15 minutes. Oh, and a fuel truck with the diesel filled up. So that was essentially one event. And he was really, when I discussed the whole incident with him, was clear to point out that that was one thing that went wrong. And because it happened at the end of their cropping period, it really didn't have much of an impact on that year's crop. However, had it happened at the beginning of sowing, what possible consequences could have been worse in that sense?
Yeah, so clearly he wouldn't have been able to complete his own sowing.
No, or later, went in later, potential yield consequence, if crop had been contracted.
Yep.
Failure to fulfill contracts.
Yes.
So things in business tend to have bigger consequences than they would if we were just dealing with an individual household or perhaps a business which didn't have quite so many variables. What assets are most important in your business? What are yours? This is a Slido question. What are yours, Hamish? What's the most important thing in your business?
Well, probably still the house.
Yep.
Yeah, and we're not. So is that the part of the business? Yes and no, but it's still a high proportion of the value of the farm, I guess.
Yeah. Okay.
In my farm.
Yep.
For many farms, it actually wouldn't be though. For many farms, even if it's a really good house, it may not necessarily be that important. Headers are important.
Yeah.
Your livestock are important.
Yeah.
People, obviously.
Yeah.
They're pretty tricky to insure against, but yeah, so it could be a range of different things that are particularly important to you, to your business.
Yeah.
It might be your computer.
Yeah. Okay.
It's particularly important. as we have found today.
So in our farming business, I'd probably probably not say the same things as you, Hamish. So we're predominantly cropping. I love my house, but the reality is its impact on our future earning potential is negligible. Headers, yeah, we've got one, but they're instantly replaced. Like realistically, in terms of contract capacity for headers, very, very easy to replace. One of the most important assets for our business, therefore, I would suggest, is our sowing plan. I guess that's an easy one to focus on at the moment. Livestock, again, another really important asset because they're an income generating asset and they are quite difficult to replace at short notice. So if you lost a fair proportion of your livestock and you wanted to replace that at short notice at any given time within a year, that would be really difficult, really expensive, and you wouldn't really know what you've got it getting. And therefore your impact on your future earning potential is really, really compromised. So for somebody else, it might be irrigation infrastructure or crop in the ground or stored fodder. So have a think about what the most important ones to your business are, and we'll pop them up here. Oh, and my thing's just stopped off. And what have we got here? Livestock being recognised as one of the most important ones. People, house, machinery, land. And certainly we could run a whole series of webinars on occupational health and safety and personal risk and, key person in the business risk and all of those intellectual property risks, but really focusing more on those sort of physical assets now and really acknowledging that livestock, because of those reasons of consequence for our own business, are really some important assets to protect. So what insurance can't you do without? Hamish, you've been in business, worked with farming businesses for a long time within the banking sector and the insurance sector. And now as a consultant, what do you find, or what would you recommend that businesses couldn't do without in terms of insurance?
Yeah, so there's only really one form of insurance that you can't afford to not have, is public liability. Yeah. Because you can, if you're wealthy enough, you can self-insure your house or your header or your crop or whatever, if you're super wealthy. But even if you're super wealthy, you probably can't self-insure if you cause a significant loss, which, for example, if you start a fire that burns out the region and potentially are sued for millions and millions and millions of dollars, it's unlikely you can afford that one. Yeah. You can afford most others. Yeah.
And it's relatively inexpensive.
Yes, it's relatively inexpensive and it's highly unlikely. Yeah. But that's, I would say, the only one you can't afford to do without.
So when we're looking at assets, what do you think the assets, physical assets, are the ones that we need to focus our insurance dollars on?
Yes, again, so well, certainly the ones you live in, I think are, it's important to, if you've got a house is important. So houses are number one for most families.
Yeah, shout out to all the sisters out there that would be quite happy if their house burnt down one day when their family were down the coast or something like that. If that's the only path you can visualize to something in the future.
Yes, and then your key farm infrastructure, which is reasonably straightforward, your shearing shed or your machinery sheds, silo complex, buildings, easy, heavy machinery. So there's some really straightforward things and really the highest value, the ones you use a lot, they're the ones that you can't do without necessarily. Again, if you can afford to replace them, then you can self-insure. But it's still, even though insurance is increasing at a rapid rate, it's still reasonably good value.
So when you say self-insure, Hamish, what do you mean by that?
I just mean that if your house burns down, you've got enough up your sleeve to build another house.
Yeah. So if the car, you write off the car on the way home from town, you can dip into your savings and buy yourself another car. Correct. Yeah. So that's essentially self-insurance.
That's right.
Yeah.
And it's not uncommon for people to self-insure some of their assets.
Yeah, I think we all do to a certain degree.
Yeah, that's right. And yes, it's in one thing that's critical in insurance is we all have an amount that we're prepared to spend. So you need to allocate that insurance money in the best areas.
Yeah.
So
where they're going to get you the best return.
Correct.
Yeah.
So
different things are going to affect businesses at different stages. So somewhere, in the start of your farming business career, where you're really in the growth phase, There's a couple of things going on. You do have time to recoup some losses, but businesses can be really vulnerable because of debt levels, because of low levels of assets, etc. You don't have that nest egg aside that sort of basically can protect you in a way of self-insurance. So insurance might be far more important in this stage of the business life cycle down the bottom than it could possibly be in terms of maturity.
Correct. When you can least afford it, that's when you most need it.
Yeah. Very good.
We've just got a question from the chat, Carmen and Hamish. I might jump in. It's from Joy. Her question might relate to that business life cycle. It's Hamish, in a lease farm situation, is it necessary for both the owner and the leasee to have public liability?
Yes.
Okay.
Short answer is yes. Yes, you both need it.
Okay, perfect. Thank you. Thanks for that, Joy.
Again, the likelihood of ever being called on is low, super low, but it really, if you're leasing a farm, it'll cost you virtually nothing more in terms of liability and public liability insurance, and same for the owner, but they must also have their own public liability, and it'll cost them virtually nothing. So.
And I guess to add to that, what documentation would you request from each other, I guess?
It's quite reasonable, that's right, to ask to have a copy of somebody else's, what's called a certificate of currency. So you can ask your insurer to provide a certificate of currency which proves that you have public liability insurance. You don't have to show the whole policy to your landlord or vice versa, but a certificate of currency which can be produced by your insurer or broker will solve that problem.
So we leased another property and just had that property name added to the public liability insurance, and it's still fitted within their risk framework, and we had no increase in the premium.
Yes, that's
so
right.
We just had basically another 7 letters beside the listings of property holdings, and that was then covered under a public liability insurance for no extra.
Yeah.
And it's a bit of peace of mind. So
yeah, but you raise the most important point, Carmen, is that unfortunately 9 out of 10 people would lease another property and just not think to notify their insurer.
Look, I think these are things that happen a lot, and it happens a lot when you're not doing things all the time. So you're not leasing new farms all the time. You're not buying new expensive equipment all the time. So the practice, all that sort of, list of things you need to do isn't well rehearsed or well thought out. When you buy another farm, like these aren't very common occurrences.
No. But finance is usually a trigger for insurance. So that's where we are triggered to insure something. If we're leasing a ute or buying a farm, then your financier will make sure you've insured it. But leasing another farm is one of those, it falls into a gap.
Yeah.
Really.
Yeah. Often you get a reminder from your solicitor if they're doing up the paperwork, but it's just a really good one to note. Great question. So general farm insurance, how do you make it work for you?
Talking to me now?
Yeah, I am. It's a question for you, Hamish.
Sorry. How do you make it? Well, again, we just go back to trying to get value, Carmen, because it is. I mean, it's an expense we don't like, but really, I mean, it's crazy if you don't take some insurance out. So, how do you make sure you get value? You actually have to put some time into it. And even if that's once a year, that's really important. I guess everyone can read those examples on screen.
So they're areas that are commonly overlooked, I think.
Yeah, they are. That's right, and that's. But again, any seller of insurance, so your broker or perhaps. Or if you use a direct insurer, then you should be having an annual review each year, which should last for an hour. Probably don't need any more than that.
No.
And you should be literally running through your business and all the activities and all your assets and making sure that you've made a decision about whether to insure those or not. Not necessarily to insure them, but to make a decision about whether it's worth it.
We had a little, I guess, near miss heads up in the second point there, carting grain or livestock. We actually had a spreader travelling on a public road, and it got rolled when someone leant down to pick up their lunchbox. Ended up in the table drain, and it had, I think, 7 tons of urea back when urea was cheap. And we, yeah, it was a bit longer than that ago, but be a lot more expensive operation now. We just realised at that point, even though the spreader was covered, the vehicle that had the spreader on it, the truck was covered, our load wasn't covered, nor were the cleanup costs.
No.
And we came to the startling realisation that that could have been a lot worse. Had that been on a semi-trailer effort coming back from port, had it rolled on a highway where we couldn't have done the recovery ourselves and would have had to pay somebody else to do the recovery, that we were incredibly exposed by that type of event.
Yeah.
And a really important one with livestock, to make sure if you are carting your own livestock that you're actually covered for that.
Correct. And again, it's something we just make an assumption. Oh, we're bound to be insured for that.
Truck's insured.
Yeah, but
potentially not the load. So that's a really good one to ask your insurer.
Hamish and Carmen.
Just got a question in the chat, sorry, that relates to this, is how do you cover that type of load, random sort of loads that you were talking about, so fertilizer, livestock, and is it each time?
No. Generally, it's just an annual policy, and you might be covered by your insurer for a certain kilometre radius or a certain value of load, generally speaking, Hamish, isn't it?
That's right. Well, they're the questions that will determine your premium is how often and how much.
Yeah. So if you're just carting a certain number of livestock to your local sale yards, your policy would reflect that. Unless you were doing something out of the ordinary, you would have potentially one general small policy that would cover you for the whole year, rather than individual loads having to be insured every time. So it's just making sure you've just got it in your head what the boundaries are for that policy. So if you are doing something out of the ordinary, or a larger radius or a higher value, that you make sure that that's covered by your policy.
Yeah, that's right. So particularly if you own your own truck, because a lot of people don't, right? So they outsource all that, and again, you shouldn't just assume that whoever you use has insurance for your load. Yeah, they should, but you can ask for them. So you ask whoever's delivering your livestock between property to property if they're insured. Yeah,
and sometimes it feels really awkward to ask those questions to someone that you've been dealing with a lot of time, historically for a really long time, and you just think that they must have insurance. And maybe this webinar can be a really good trigger for that. So you can say, there was this mad woman from Toowoomba talking on a free webinar the other day, and she said how important it was, and that there were, potentially stock carriers out there that didn't have insurance for their loads. That you'd have insurance, wouldn't you, mate? And just see the reaction that you would get from that. So blame it on me. I can be the prompt for you asking that question. So crop insurance. Do you know I had a job years ago as a crop insurance assessor? And I'd go out with my little ruler and count the heads in the rows and count the missing grains and assess crops for hail damage. It was really interesting to see the different approaches within the same region, because hail would hit a region, towards crop insurance. So some people didn't insure, and I didn't inspect those crops. I was inspecting all the crops across the region as a subcontractor, and lots of them were insured with different businesses, like different insurers, different underwriters. Some people with smaller crop areas normally don't bother to insure, and that's perfectly reasonable. I think businesses have to keep in mind that potentially what they're actually insuring for is a total wipeout. So even though you can handle some losses some years in some paddocks, and you might have livestock and you might be grazing things off, how could you handle a total wipeout? So what's a way that we can actually reduce our premiums with crop insurance?
Again, it is remove loyalty from your considerations. Remove the fact that you may well like your broker or direct insurer, and you have to test the market crop insurance is typically tested every year. I mean, most people get a couple of quotes, which is good business practice. And the reason why is if a particular insurer that you're using may have experienced a lot of losses in your postcode, which might be the other side of town, but your postcode, and so the premiums in your postcode go up.
Yes.
But you haven't had a claim, but you're penalised. So at that point, you need to try someone else whose postcode might not be. That they may not have experienced those losses, so therefore their rates, their premiums might still be cheaper. So it's got nothing to do with that you or your ability. That's just the fact that there might have been an insurer has had a loss. They want to get their money back. So.
Yeah, great.
So you have to test the market. You have to invest a bit of time in it.
You don't have to invest too much time, I've found.
No.
So a lot of them will want you to fill out their individual forms. I don't really bother with that. I put my name, contact details at the top, and then just attach a spreadsheet with our crop details on it.
Yep.
So I've only had one once that actually got back to me and said, Carmen, can you please fill in the form? And I just didn't get back to them.
No.
So most of the time, you just need to put list of crops, and that's going to be the same list that you send to all of them, and just fill in your contact details at the top, and they'll give you a quote.
Correct.
So interestingly, this is the first year that we haven't had a crop in the ground, and we're being courted already by insurers.
Yes.
So really interesting. So I think it's going to be incredibly competitive this year, and potentially, therefore, some benefits to be gained by shopping around.
Mm.
What about livestock?
Livestock insurance is pretty good value.
In terms of like dollars per potential return, or dollars per risk, or dollars per...
dollars, what it actually, so to insure $100,000 worth of livestock for fire, it isn't expensive.
Yeah.
But where you need to be careful is if you want theft cover, because a lot of the larger policies, theft tops out at $10,000 odd.
Yeah.
I think you're fine, but which might be fine. I mean, not for cattle anymore, but I mean, most livestock theft are small numbers in terms of numbers of head, but can obviously now be a lot of money. But some insurers don't have that restriction on total claim. And if you're if your business is livestock and you're worried about theft, then you can get insured for that, and it's pretty good value too. Yeah,
so good to get a quote.
Good to get a quote. So if your insurer doesn't do it, and it's a big part of your business, that just means you might have to change insurer to find one that satisfies your requirements, but it's possible.
So this is really interesting. There's lots of livestock finance products on the market. They've become, I think, more important as businesses have moved out of that drought period and looking at being understocked, getting back quickly as possible up to that fully stocked period. So some of them might have livestock finance products where they've borrowed money to stock a place, where they're actually essentially backgrounding livestock for someone else. Yes. So the title of the livestock is in somebody else's hands, even though they're growing them out. So that might be required. So if you're entering any of those agreements, you really have to just make sure you're appropriately insured.
Yes, that's right. You just need to check that, because a lot of those livestock lenders, you don't actually own those sheep or cattle. So if you don't own them, you can't really insure them.
Yeah.
So that's one thing about insurance. If you don't have an insurable interest,
you
can't insure them. So I'm not that familiar with those livestock products, but so if they're not insuring them, they need to.
Yeah.
It's certainly something to ask a lot of questions about if you're using them, unless you can afford to lose those livestock.
Yeah.
And if you're financing them, you probably can't.
No, definitely not. So we're running through lots of different examples here. And I think at this point, some people might be thinking about, if I could turn back time, those sorts of things, like we did when the truck rolled over and we lost a load of fertiliser. And one thing I'd really like to take you through is this: there are no perfect farmers. There are no perfect farms. There's no such thing as a perfect decision or perfect conditions. We are dealing with so many variables in agriculture that is impossible to make the right decision every single time. We've never got an unlimited budget. So when we're looking back on things that we could have done in the past, we have to acknowledge that there wasn't a whole lot of money around potentially to do those things that we wanted to do. So it's important to make our decisions, look forward and not look back, and really focus on the things within our control. And they tend to be the things that are more, the things in control are the things potentially we can't get policies to cover. And that's why things like theft, which we potentially have a degree of control over, are harder to insure for than things like a storm damage or a flood event or a fire.
Yeah, that's correct.
So the money, the top 5 tips for getting value for money from your insurance. What do you recommend, Hamish?
Yes, well, the first thing I say is what not to do. And if you talk to your broker about reducing your insurance premium, and they suggest to you to reduce the sums insured on the assets that are important, for example, your house or your sharing shed or whatever, then you seriously should change brokers.
Yeah.
Because that is not a satisfactory way of reducing your insurance total premium. They're really, the only options really are you can ask for increased excesses.
Yep.
And
that might be one of our other points, I think.
Is it? Okay.
Yeah.
Yes. Sorry, we've cut to the chase. But and again, you'll get a lot of you will get pushback from some brokers, remembering that they're rewarded on premium.
Yes.
So brokers are getting paid on premium, and with respect to any brokers are listening who are doing a great job, they don't, please don't be offended, but really. For you to save money, that means they're reducing their income as well. So clearly, it may not be in their best personal interest, but I'm sure good brokers would still help you, assist you to reduce your premium in any possible way. But asking for increased excesses is one way that you can have an impact on your premium, and again, then you have to study the different quotes, semi-carefully. Not because you might think that a $5,000 excess, for example, on a building might seem like a lot, and it is, if something goes wrong, but things really go wrong. So why not take a higher excess where likelihood is low?
Yeah. And that's mathematically really often quite easy to calculate. So that was something we did with our policy, looked at putting up the excess. So it went from being a $500 excess, I think, on vehicles to a $1,000 one, and maybe a $1,000 excess on buildings to a $5,000 excess.
Correct.
But the savings in the premium were huge. And we worked out how many claims we would have to have in 1 year to actually make up for the savings or the increase in excess, what we'd be paying out in the excess. And it was a no-brainer.
Yes,
to work that out. We're saying, well, we're not realistically going to have 5 claims a year. We've made up that $5,000 in safe premium.
Yes.
So just really important to read the fine print to make sure the excess is only applied once per event. So if you've got something like a big storm, you're not paying $5,000 excess for the shed and the second shed and the shearing shed and the house.
Correct.
It's one excess per event. It's just one thing you just want to be really sure of, because if you do have a major event happen, they're the events where you realise how significantly underinsured you are, and you want to really basically be getting back everything you can.
Correct.
So be realistic about likelihood.
Yes, well, and the next most obvious thing to do is to critically examine what's listed on your insurance policy and take out the things that you hope will blow down in a storm. For example, a rickety old hay shed or whatever, and things that you're not maintaining. So if you're not maintaining, if you're not, I mean, I hate to say this, but if you have an old shearing shed that you don't have sheep anymore, if it's not bringing any value to the farm anymore, and it's in bad condition, is it really worth insuring? I mean, the counter argument is, well, if you're selling the farm, it's worth having a shearing shed.
But if that's not, you're looking at your stage of the business life cycle, that's not necessarily within your plan.
That's right.
Yeah.
That's right. So take and then so take off the things that aren't life and death for you, really. And when I say life and death in terms of your business, so yeah, so most if you're a business that has if it has hay sheds because you have hay, then yes, they're important. But if you are really looking at ways to critically reduce your premiums, you're gonna have to take some things off.
Yeah.
So what can you
Do with that.
What can you do with that?
Yeah. And I often think about it as saying you're buying a ticket in a lottery that will become damaged or burned down. And is it necessarily a good value for money ticket? So you're paying $500 a year that shed might not be there at the end of the year. Is that actually a good potential return on the investment of that $500? Because that $500 could be invested elsewhere within your business.
That's right.
For a greater return.
Yeah.
Yeah. But the things you need certainly have to
I think that's
be well insured.
That's right.
And maybe again, the shearing shed's a good example. If you were looking at that shearing shed and its current value and what you would like to replace it with if something happened to it, you've got to make sure it's adequately insured.
That's right.
Yeah, great. Don't be loyal.
Yes, and it's sad because I used to sell insurance for a while. And I thought loyalty was really important, but and there's to a degree relationships are still are super important in these parts of your business. And if you're using a broker, then it's up to your broker to check the market on your behalf, brokers. But if you're if you're dealing direct, so to speak, then unfortunately, your loyalty will not necessarily be rewarded. And they talk about, some claims where there's a 50-50, it's a 50-50. Well, just because you've been with an insurer for a while, it doesn't mean that claim will be paid.
So do you mean that all that time spent at the pub having beers with your broker after footy isn't necessarily going to get your marginal claim over the line, Hamish?
It may be worth it for lots of other reasons, but not necessarily for the claim.
Right. Okay.
Although they will work on your behalf. There's no doubt about that. Brokers will work for you to make your claim progress smoothly.
Yeah.
If indeed it is a claim.
So if there's no broker, if you've got a direct relationship with a particular insurer, are they going to take that into account, your long-standing relationship with them? If it's a claim, there's no 50-50. It's either a claim or it's not. Yeah.
And so you can't turn, it's very hard to turn something that's not a claim into a claim.
Because essentially it's fraud.
That's right.
Yeah.
That's right. So no, so the answer is no. So there's no, it's helpful to have loyalty because it makes life easier and it makes the renewal more efficient and it's less time for you.
True.
But you can't be loyal forever because you will be taken advantage of eventually.
This is a really important point. Point 2, assessment is often independent. So it's actually not your insurer or your broker going out there to assess the claim. In the instance of the crop insurance, I was out there, subcontracted to a subcontractor to a subcontractor, making an assessment of the claim. If it's a building inspection type assessment, it's someone, again, subcontractor to a subcontractor to a subcontractor who doesn't know your history of insurance with that insurer.
No, that's right. It's supposed to be a completely independent process, that part of it. You
can also ask for a discount if you have been loyal. If you do want to stick to somebody longer term,
yes,
and just hit them up. Exactly,
yes. And there's lots of respectful ways to ask for improved pricing.
Having a beer after footy.
Well, there's that, but probably more formalised because you're much more likely to get a better result.
Right, okay.
And explain why you're asking, and if you don't get a discount, then there's a reason just to test the market.
Yeah, great, very good. Paying on time. General insurance, seek new quotes every 3 years. One thing when I'm doing this is that people want to visit on farm to do an initial quote. And that often puts me off requoting for things because I don't want to, A, clean my house, B, clean my car, and C, spend a day driving around farms looking at old sheds while someone steps them out. Do I need to do that?
Well,
What What's the most time efficient way you could get a new quote on your general farm insurance?
Yes, the others, you can certainly get indicative quotes from a lot of insurers.
Yeah.
So that's one part of the process, I think. But I also think there's a lot of value of eventually having your, perhaps you're most likely 2 insurers on the farm, because
the chosen one,
or the 2 you're down to, because hopefully they'll bring something. Hopefully that person will bring something to the table that you mightn't have seen.
Yeah.
In terms of what's worth, where there's value,
where there's a gap,
where there's not. That's right.
Yeah.
What have I missed?
Yeah.
Because we do run the risk of dumbing it down so much that we'll end up with a poor result. So I understand
my level of housekeeping.
Your level of house. I understand cleaning the house, but you can also meet them out in the shed.
Yeah, okay.
And I've done that. I have had that before.
Yeah.
So that's because they don't necessarily need to be in the house.
Yeah.
Actually, they just need to have a look.
Yeah.
But it's So there is a point where I think it does have. It is important, but not to narrow 5 to narrow 5 down to 2, but not to narrow 1 or 0.
Fantastic. So in terms of payments, whether you pay monthly, quarterly or annually, that's also something that you consider, and something that needs to work in with your cash flow. So in farming businesses, we often have variable cash flow, and this is going to change depending on your industry, your region, what sort of livestock you have, how you sell them, etc. So if you've got a very variable cash flow, or a cash flow that follows this sort of a pattern, you're going to want to make sure that your premium's potentially due in one of those peak months or just after a peak month. So you've got some cash there to pay the premium. If you've got a fairly even flow of cash flow in your business, you're probably going to want monthly payments because that might suit you better.
Correct.
But a little trick that you can play once, and you can play it once only if you're having a bit of a cash flow squeeze, is if you've got your annual premium due perhaps earlier in your season, and it's due here and it's a big bill, you can actually shift at that point in time to paying monthly. And then potentially if you had, say, a $5,000 premium, you went to $500 a month or similar payments, you would then shift that expense over a longer period of time and actually ease up some cash flow at a time that you might need it. But you might be paying for that, mightn't you, Hamish? Yeah,
it's likely you would insurance is paid before you need it, so to speak. So yes, there's usually a discount provided for paying 12 months in advance.
Yeah.
And just be careful with that too. Some brokers will offer you insurance finance, which is typically very expensive.
So that's for an annual premium, basically.
That's right.
Because you wouldn't be financing your monthly.
And then you have to pay them monthly. So it just if your insurer only takes annual payments, again, I would say just look around for a new insurer.
Yeah.
Because there's...
And that doesn't suit you. Fair enough if it suits your cash flow.
Yeah, that's
fair
right.
enough, you get one big bull check a year and that suits you.
Correct.
Yeah.
But yeah, it's the world's moved on.
Yeah, great. Very good. So what can we do to actually have a better deal in terms of our insurance? What do we do if we've got 10 minutes?
To invest in insurance? Yeah, so you'll see from the points that we've written up here, but you've got to look at the policy to start with, Carmen. I mean, typically people are triggered to look at their insurance if something happens or if it's a renewal, which is fine. That's fine. But if you want to manage your insurance, you're going to invest some time in it. So if you've got 10 minutes, I'd and if you're confused or if looking at your insurance policy is prohibitive because it's 15 pages long, then you can actually ask for a condensed version. So you can ask for...
So that might look something like this.
That's right.
Yeah. So all of the items listed.
Correct.
What the excess is, what the value is, how much you're paying, etc.
That's right. So your broker or your direct insurer will provide that for you. I mean, it might take them a week, but they should. So spend a couple of minutes doing that, and then you'll have 8 minutes left.
Yeah.
when that comes in, to actually run through those items. Just run your eye over them. If nothing else, look at the sum insured.
Yeah.
You know, does that look about right?
Yeah.
Are the buildings there you expect? Are those big items of machinery on there?
Yeah.
But if nothing else, and it's just going back to that, what is the right amount to have on your house? Okay, so that's getting harder and harder. I mean, given the price of housing, well, building a house has sort of just gone up 40% over a couple of years. So if nothing else, if you don't have at least $200, $2,000 a metre to replace your house, you're probably underinsured.
Yeah.
So that's a terrible roughie, but you know, if you've got a house in the eastern suburbs of Sydney, it's probably more like $5,000 a metre. But in most sort of farmhouses, you know, even good farmhouses would be north of $2,000 a metre to replace.
Yeah, it's a lot of money. Yeah, but again, as you said, the likelihood is low, so potentially the premium isn't all that high.
That's right.
Yeah.
So if the difference between 400,000 and 500,000 won't be 20%, I don't think.
Great, fantastic. So we did this exercise of looking through and realised we'd missed a truck on our insurance, not a very big truck, not a very expensive truck. Trace back to work out why it didn't end up on our insurance, and worked out we bought it the week I was in hospital having one of the babies.
And it probably wasn't financed.
No, I don't think it was, because it wasn't a very good truck.
Yeah. Well,
so it slipped off entirely. So these things, it's really valuable exercise to just go through and say, is everything on there that needs to be on there?
Yeah.
And
again, it's not so much, I mean, the value of the truck is one thing, but it's the public liability on that truck.
Yeah,
that's
true.
So if it's registered, you're probably picking up some cover that way.
Yeah.
If nothing else.
So if you've got an hour, what do you do?
Yeah, so let's go back to the list, and you can actually invest some time, and it will take you an hour to look over the list, and certainly a medium-sized business tallying up all their equipment. Not saying you need to insure all your plant and equipment, but you at least need to have
make an assessment yourself.
Thought about
it.
Yes. Yeah. And a lot of farms might have a couple of old tractors that I guess now all of a sudden are worth a whole lot more, but are they really worth insuring for their value if they burn down?
Yeah.
That's again your decision.
Ticket in the lottery argument again.
Yeah. But that's right. But you do have to draw the line on some things, and if you've got $5,000-$10,000 tractors, you can probably afford to lose one.
Yeah.
Five of them would hurt.
Yeah. Great. So if you've got a whole day.
Yes, well, this is going back to your getting someone out to run through everything.
Clean my house. Yeah.
I'll meet them on the veranda.
Yeah.
That's right. Yes, and truly though, a visit from someone to assess your insurance should be no more than 2 hours.
Yeah. Okay.
So anyone that comes out, you just let them know you've got 2 hours.
Yeah.
And it'll get done. They need to collect certain amounts of information.
Yeah.
You don't need to become best friends with them.
Yeah.
And better if you can give them a list.
Yeah.
That they can start with.
Yeah.
But you also want them adding something. So you want.
Is it appropriate to give them the list from a previous insurer?
Yes, that happens. Is it appropriate? Yes.
Yeah.
Yeah.
Right. Very good.
But the only thing is you're limiting your improvement to 10%. Whereas if you don't give them the price.
Oh, so you give them the list of items without the price on it.
Yeah.
Yeah.
Yeah, because you could end up with a better price. If you give them the list and the price, like all they have to do is beat it by 5%. Right?
Yeah, and they know you're going to jump.
So I want them to give them the very best price the very first time.
Yeah.
So certainly the list of items.
Yeah. Great.
Is helpful.
That makes the admin a lot easier.
Yeah.
Yeah. So I think the other one, sitting down with your team or family and discuss the key risks facing your operation. Are there ways to reduce the likelihood of events? So if we, swing back to one of those early slides, risk is a combination of likelihood and consequence. When we're talking about insurance, as much as we think insurance will stop things going wrong, it doesn't. It only really reduces the likelihood of something. It only really reduces the consequence.
Yeah.
We've got to make those smart business decisions that actually reduce the likelihood of events going wrong at all. And it's really good to sit down with a wider group of people, because other people are going to notice different things about your business.
Mm-hmm.
And if you've got that business where you've got off-farm siblings that are still potentially got their finger on the pulse in terms of the industry, they can be great, I think, coming back, because they tend to notice a lot of things that you might not notice day to day.
Yeah, that's right. It's surprising where ideas come from, or what other people see as risk, and whatnot. But
and you're going to find that, I think, within your businesses as well. Like some people have got some, we notice that this within our own businesses ourselves are, particularly concerned about some particular assets or some particular events. Other people more concerned about other assets and other events. So we've all got our individual risk biases, our individual preferences, and life histories that sort of shape that. So that's normal.
That's right. Yes, I mean that's just, and if you give it an hour, if you and your family give the discussion of
we've
risk,
got a day. I've said
a day. Even an hour out of the day to discuss risk.
Yeah.
And sure, it's unlikely that you'll implement all the ideas you come up with, but there's just recognising them is step one, right? And I guess you'll find that the biggest risks come back to people all the time. So you just need to compartmentalise that part of it. And if you're just trying to reduce some risks about your infrastructure, that's something that you can probably cover off in a much shorter space of time.
Fantastic, great. So we just really encourage you to do the numbers. So we're taking the emotion out of things and actually doing the numbers on insurance costs, possible risks, possible likelihood, possible consequences to make some really smart decisions. So Lisa, do we have any other questions in the chat there that people have asked?
Yes, we do. I think, Hamish, you might have answered one, but it was definitely, the question was the benefits of using an insurance broker versus approaching an insurer directly. I think you answered that, but if you anything to add,
how do brokers work, Hamish, for those people that haven't used one before?
So the theory of using a broker is that they sell your insurance policy on your behalf, and they should be selling it to a range of insurers, which by and large they probably do. There isn't a huge range of insurers in ag, that is one problem in ag. Is just to put it into perspective, is that actually the agricultural insurance industry is relatively small and very high claiming. So it's actually not such a super strategic part of QBE or the big insurers, because they
don't want to be there. They don't want to touch it.
I don't think anybody really wants to be in ag insurance, but they are, so that's great. But the brokers should be testing with 3 or 4 different insurers to make sure you're getting the best price. They should hopefully be adding some value in terms of perhaps talking about excess and about what's worth insuring or not. But they should also certainly assist in a claim. In a claim, so they can only assist in as much as they can, take care of the administration. They can't change what has happened, or alter the facts. But they also, brokers, large brokers have good relationships with insurance companies, and certainly that can be advantageous. So I don't know, is there a benefit to having a broker? They're good to use, but you can equally have a good relationship with in a direct situation.
So essentially they're saving on administration. So you've got to look at your own business strengths or resources, where you're at.
That's right.
So if you've got someone in your business that's equipped to handle all of that, you potentially can do it yourself.
Yeah,
And
that's
if
right.
you're just trying to be everything for your business and don't have that capacity, potentially then it might be good to look at a broker.
That's right.
Very good. And
Another question I've got here, Carmen and Hamish, is as an GST, who should insure against livestock theft? It's back to your livestock insurance questions.
As an GST?
Yes.
Okay, so the stock are on your, so you own the land, right?
That's my interpretation, yes.
Yeah, you can typically only insure what you have an insurable interest in. Does that sound technical? You can't insure something if you don't own it.
Yeah.
So if I own the sheep and I'm sending them to Carmen's, then I should still be insuring them. Carmen shouldn't need to insure them for theft.
But I would need to have public liability insurance.
You would need to have public liability insurance. That's correct.
Yeah.
Yeah. So Carmen needs to be insured for the fact that she might leave
the gate open
onto
a main road.
Yeah. And those sheep could cause a horrendous accident.
Yeah.
If Carmen is negligent and burns all those sheep, then if you've insured them, if the owner insures them, they should be insured for fire. So it takes care of that.
Yeah.
Certainly a question though for your whoever is insuring you is just ring and ask them that question
to make sure you're covered if you stock around on adjustment.
Correct.
Yeah.
Yeah, because they're not necessarily. Sometimes they're limited to stock on your farm.
And the same would be the case. We ran through how some policies will give you automatic cover for livestock up to a limit for fire and for.
Well, usually for fire, it's usually to the sum insured, so 100,000, 200,000, but the theft is often limited to 10,000.
Yeah, okay, and it may only be on your property, so it'd be something that you'd need to really check out.
It is. It's just you've got to notify your insurer more times than you really think. And that's unfortunate, but that's just the way it is.
So it's a really good thing to say, to have a question in your mind every time you change something. So, you put some stock in a little homemade feedlot, or you put some stock out on adjustment, or you start carting your own stock. So every time you have a change of business practice, the question needs to come up in your head, are we covered for this?
Yeah.
And when you're rolling along doing the same sort of thing all the time, not doing any contracting off farm, not carting any stock, you're just doing the same thing. Not perhaps an issue, but it's when you start changing things up a bit, which we often do after things get a little bit tough. As much as things have been really good for a couple of years, those bad years aren't too far behind us, and lots of businesses are still very much in a rebuilding phase. So we're trying to, make a bit of money doing a few different things, and perhaps doing some things that we hadn't done before. Yeah,
it should be a question that is asked. If nothing else, at renewal, your insurer should be asking you, have you changed business enterprise?
Yeah.
And going from sheep to cattle is a change.
Yeah, okay.
For example.
Yeah.
Sowing wheat versus canola isn't.
No.
But you usually have to make a declaration about what your business is when you start a policy. So if you change it from that, it's important to the insurer to know. Yeah. For the insurer to know.
So we've got a tricky one here. Hamish, I'm going to put this on you, and you might want to take this one on notice, or perhaps point them into way to somebody else. If an energy generating work leases a portion of your land for infrastructure, is your insurance a sufficient cover? What cover should the leaser take out to satisfy the leasee's requirement?
Yeah, I'm not sure. Yeah, I just would need us.
So energy generating work, I would suggest it's like solar, wind turbine type thing.
Oh, yeah.
Quite a specialist area, isn't it?
Really? It is, yeah. Well, it's unlikely you'll own that. I would ask my broker about, people entering in your land. But again, that'd be a liability. You're potentially only a liability issue, I suspect. About, and then there'd be a road. I'd say that'd be the wind farm. The wind farm's responsibility to ensure all that infrastructure, obviously, but or you would be. It depends what loss you might be worried about.
Yeah, okay. I do know someone that actually works in that industry, so if you wanted to email me individually, I'd be more than happy to pass their details on. So from a legal perspective rather than an insurance perspective, but I'm sure they'd be able to brief you.
If a wind farm comes onto your farm, I would notify my insurer.
Yeah, okay. Very good. Now, another question here at the bottom, with the dollar value of the 2022 winter crop potentially increased on 2021, but also input costs significantly higher in regards to crop insurance. 1, do we insure full value? 2, will crop insurers limit the amount of clients they will take on board? So the first part of the question, do we insure to full value?
Well, that's insuring for full value is insuring for profit.
Yeah.
Okay, so you don't necessarily, some people take the approach they only want to
cover their
input costs.
Yeah.
So they might be the people who don't borrow any money.
Yeah. Yeah.
I just don't know any of those people. So if I had to recommend anything, yes, I would insure for full value. And don't forget, you can keep adjusting that value and adjust even after renewal, even after the what's it called when you have to on the date we have
the review date.
The review date of your crop insurance. Anyway, from that day on, you can actually increase yields and you can increase price.
You just can't bring them down to reduce your premium. Yeah.
No one ever does, but you can.
Yeah.
So don't get too hung up, at the date in September when you have to put the value on everything, because you can actually increase.
Yeah, under most premiums.
But I would strongly recommend it. Actually, crop insurance usually works out very well for claims.
Yeah.
Particularly big claims. Small claims, sure, everyone grumbles about the 10%, the 5% excess, because you can impact on your crop insurance via excesses, usually significantly. And remember, you are insuring for the total loss.
I think a really good exercise to work through there is to actually model a couple of loss events. So model total crop loss, model a couple of paddocks full loss, and see the impact on your business. So certainly businesses that have typically businesses will say we have a policy position for crop insurance.
Yes.
Some don't insure at all. Some insure roughly about 50% of the value, and they'll do that by reducing the insured yields.
Yes.
Or potentially might not insure even some paddocks. So businesses have a policy position. They don't revisit it when things change, and things change when, like Robin's pointed out, we have a dramatic increase in input costs or a dramatic increase in prices, but it's probably the input costs that actually make the biggest difference in this case. Or they've taken on more debt. So potentially they've expanded their area under crop, they've leased a new farm, taken on a new farm. So they're actually more vulnerable than they've been in the past. And that buffer that they typically would have had of either being able to draw on saved funds or redraw in terms of taking on a little bit more debt from the farm, they might not have available to them anymore. So their business is more vulnerable.
Correct.
So number 2, will crop insurers limit the amount of clients they will take on board? This is what was flagged by the person trying to flog me insurance 2 weeks ago. They were saying, maybe you got the same email. They were saying, where premiums are high, risk. We'll be limiting the amount of clients they take on board.
Yeah. You would imagine.
So whether it's a marketing spiel, whether it's a genuine, I'm not sure.
Yes. Well, So insurance companies would be limited to, they want exposure of X $1 million to crop insurance, and all of a sudden,
it's worth twice as much.
It's worth twice as much. So in theory, therefore, there's half the amount of customers they want. So I don't know the answer, but I would suspect I would be getting in early and insuring my crop as opposed to later.
Yeah. Because
they have capacity limits. They have capacity limits in certain regions, in postcodes, etc. And I'd get quotes as soon as you can, see what the rates are like.
We've got to get the crop in first, Hamish.
But you know what you're going to say. Or even if you don't, you can wipe it out, right?
Yeah.
You can cancel it.
That's true. That's true.
So you don't. So I would just. I would be doing it on your planned sowing.
Yes.
Even if you can't, because you can take it off.
And one day it will dry out, and we'll get the tractor on it. Very good. Fantastic. Any more questions, Lisa?
No, I think if there are any further questions, we'll follow up. So I think we might wrap it up there, Carmen and Hamish. So thank you for your time. What we will do is in the follow-up, we'll share this video recording, but we'll also share your contact details too, so they can reach out directly. So if you're happy for that. Formally, thank you very much, Carmen from AgriFocus and Hamish White from Hamish White Consulting. Thank you for your input today. You've really raised some great awareness, I guess, with the likelihood and the consequence, particularly with insurance. And I think the top 5 tips was really crucial, and what I really like is the time hacks at the end too. So if you only got 10 minutes, you can achieve a lot in 10 minutes, and or incrementally makes a huge difference, doesn't it?
Yeah.
So thank you for your time.
We'll include those details in our handouts, Lisa.
Oh, perfect.
Yeah, you can email out to everyone so they can use that as a bit of a prompt to actually go back in a day or two and actually make a start with their 10 minutes or hour or day, whatever they've got there, to implement some changes or just review a few things on farm.
Absolutely. Well, thank you anyway for your time. Greatly appreciated. And I think we had over 36 people in attendance, and we'll be able to send out the recording to all the other attendees that couldn't make it today. So thank you for your time, and we'll forward this recording in the next few days. So thank you very much, everyone.